Hi, guys. Welcome to this week's episode of Global Money News Review. My name is Ola, and basically, what we do every Saturday, 9 a.m. GMT plus one, is that we discuss the economy, news in the economy, news around businesses, and how it affects your pockets. So, if you haven't already, please subscribe to our channel and hit the notification button so you know when next we're live or when we post any new content. Uh, so, my name is Ola, and I am a personal finance trainer, personal finance educator. I help people put their finances in order. Like I said, subscribe to our channel and know more about us. Today we have very interesting news. First thing, so basically we it's a 15-minute session and we go through global news, African news, and then Nigerian news because Nigeria is my country, my home country. And so we will start with global news. Now, what's happening in the global space? The most notable news was about Google. So Google is owned by a company, Google that we all know, Google Maps, Google everything. It's owned by a company called Alphabet. And if you are an Alphabet shareholder, please say hi in the comment section. So yeah, there was some news around Alphabet, the company declaring very, very good numbers. Like they released their results and everybody was happy with it, excited. They busted everybody's expectations and stuff. And it's quite exciting because okay, as a company, it shows that they're still growing. Their ads business is growing. Their cloud business is also growing, which is good, and they're on the right track. Exciting for everyone, yes. But why is this? First, on one side, is good because such a massive company is still growing and it's still growing and it's still on fire. So that's good. That's one. But on the other hand, what is the concern? So there are two things that are hanging over Google as an investor that you should be looking out for. If you are one already an investor in the company, or if you're looking to buy as per one of the big tech that you should be a part of. Now, one is the fact that there's this antitrust thing hanging over their head, right? Where they might be forced to split up the company or share their data. Like we all know, data is like what keeps Google ahead of everyone, right? And so there's this antitrust thing where the US regulators are saying that Google is too big. They are somewhat of a monopoly in that space, in that data ad space, and so they need to break up. And we had discussed that like maybe a month or so ago. So if you haven't, just go back to previous episodes of these sessions and listen to how we broke it down and what it means for you as an investor. But then the second thing that is a challenge, which we've also discussed in the past. Okay, sorry, before we go to that, the US regulators are going to come up with their final or their next announcement on that antitrust case, because we won't call it final because whatever they say, Google will still engage, blah, 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 and it's an ongoing conversation. But they will come up with the announcement on the 20th of this month. So as an investor, keep an eye out, or if you're looking to invest, that is a date to look out for what's going to happen with Google in the future. And take note, it's going to affect all the big techs. Yeah, because if they're able to successfully deploy it with Google, then we're going to look at okay, what is Microsoft big on, and where are they supposedly in a monopoly, right? And how can they break it up? Yeah, that's on one side. But on the other side, also there's also Google's AI platform, Gemini, and the fact that there's a scare that as Gemini begins to grow, then it could what's it called, impact their ads business, where I mean the growth they're talking about today is based on their ad business. So it's something that you need to look out for. We've discussed both concerns in the past, so I recommend that you go back a little. Some of those explanations are still valid even as at today. So yes, go and check that out. But for Google, we say congratulations for today. Well, we are on the lookout. Now, the most important thing to note here is that even if we say this is a good company to buy today, the cheese can move. And that's what people need to understand. That's why you need to stay on top of your game, because something that might be horrible today can become the best, and something that can be good today might become something you should be jumping out or bank your profits and keep it moving. Yeah, that's one. Now, on the second part, we are also, the US elections are around the corner, and at the same time also the US government has released news, has finalized a rule restricting investments in Chinese tech firms. Now, we've talked about these things in a lot of ways, right? There is economic security. You can't argue when a country is trying to defend its economic security, trying to defend its businesses and their livelihood. But what is the issue with China? For whatever reason, however they have been able to achieve it, but China is successfully able to produce the same quality at like half the price for most things these days. Maybe because a lot of these goods that you see in America, products in America, they were probably built or manufactured in China, and then the person that gives the specifications would have to come to America and then sell at a profit, if you get what I mean. Add shipping, add all those things, taxes, blah blah blah, and still sell at a profit. So there's no way, if China is coming in direct to sell to you, China will not be cheaper. And what is America's problem? You guys, your wala is too much. Your problem is too much. People should take a chill pill and find another market to try and conquer, not our territory. From one angle, it does make sense, right? From an economic security perspective, because if China is pushing all your businesses out of business, all your major companies out of business, then what's going to happen is that eventually your job numbers are going to start dropping, and your manufacturing numbers are going to start dropping, and your stock prices are going to start crashing. It's going to be an economic issue. So you have to defend that. But on the other hand, for the consumer, what you're saying is that there's someone that can sell this thing to you cheaper, but you are forced by regulation to buy more expensive. It's a social, economic, capital debate. How do we balance this out? So I would say, number one, as an investor, understand that regulation is very key. Regulation that supports your business in any territory is very key. So you need to look out for that when you are investing in companies. And then number two, regulation can change. You can start off with something that, oh, the regulation does allow this, but it can change. So when we say don't put all your eggs in one basket, this is for things like this, because China is doing well, right? So imagine if you invested there, but something changed. Your target market was America. We enter the market, blah, blah, blah. But a whole regulation has come. What are you going to do? That's how it happens. So you want to, okay, before we move on, if you haven't already, I see some people, please say hi that we have live listeners here. Say hi in the chat. I'm always happy to acknowledge you. Haven't already. Sign up to our Substack newsletter. It's free. Connection lost. Okay, I'm back. And you get on the market and what you put your money in, and then connect with us also. Oh, it's choppy today. So yes, this next news is from Africa, and I'm actually excited. Okay, I see people here. Fantastic. I think we should be back. I should have done this earlier. So, Africa news. Okay, yeah. So the global watchdog clears Senegal from from the dirty money list. Now, there's a financial action task force that is basically responsible for checking countries to ensure that they're not engaged in money laundering and in terrorism financing. So you see all this anti money laundering that you hear about everywhere. There is like a general body, and it's a what they call it, cross governmental body that is and their job is to make sure that nobody's involved in money laundering. And they have two lists that we should know about. There's the gray list and then there's the black list. Basically, the gray list is for people who have like a couple of things they need to fix. And then the black list for people that are not making an attempt to say they are not doing money laundering. And so for the blacklist, there are like three countries on the blacklist, but then the gray list, there are like maybe 40 countries on that list. Now, what happens is that when if you have some of those things you need to tick off the box, right? Then compliance around the world is required to ask further questions for any transaction that is related to that country, right? And so what has happened is that Senegal has been able to successfully get off that list. And what that means is as an investor, a standalone investor who wants to meet all their compliance requirements, Senegal is one of those countries where okay, you can easily do transactions with. And so, as a country that is trying to increase their global investor attraction or attractiveness, it's a good one. But then on the other hand, there was a change in government. And on the back of that change in government, there was an audit of the books, and it was discovered in Senegal that they underreported on their debt profile, on their financials. The numbers were not what it was purported to be. And because of that, there was a downgrade by the rating agencies, and their bond yields just spiked. Like people just sold. So let me put it in price terms. People just sold their bonds, and the prices came down. So whilst on one hand, Senegal is trying to, I mean, it's good if you think about it on the long term, because what has happened is a change in government, and the government is trying to do things right. They were not obligated to release that audit report, but I think in the spirit of transparency, they released that audit report, and then of course there's going to be the impact on their bonds. However, those bonds, the earliest bond is maturing in 2033, so they do have a lot of time to what's it called to gather themselves together, clean up their books, and make money available to pay back. So it's just going to be choppy for a bit. But if they stay true to their transparency and doing things right, then in the end, the country will be better for it. However, this is also a major one. Being able to get off that list, it's a major one. Now, the second news out of Africa is that South Africa's Pick and Pay is exiting Nigeria. So Pick and Pay came into Nigeria 5 years ago. They opened stores. They're like a department store somewhat, and they open stores in different locations, but they are exiting now. There's one part where a lot of international companies have been leaving Nigeria, but also a part where even Pick and Pay in South Africa has been declaring poor numbers in recent times, and they've had to shut down some stores, how to franchise others, and just try and rebalance their books because they haven't been doing well. So this just highlights the the what's it called the nature of business, right? Imagine 5 years ago, they were expanding. Oh, let's go to this place, let's go to this place, let's increase our stores around South Africa. But now they are slowing down, they are pulling back, and one of the things they are doing, they're diversing some stores to release cash. That's what they've done with the Nigerian holding, to release cash and strengthen their books. And then when they stabilize and start going back into profitability, they can now start thinking of expansion. That is the nature of business generally. And it's important as an investor to understand that and slowly but surely begin to embrace it, because that's just it. That really is just it. Um, so the final news is going to be out of Nigeria, and on the back of that FATF list, FATF explanation. So fun fact is that Nigeria is also on that list, and Nigeria got onto that list February 2023. Right now, if you remember the news where Mercury Bank said they were closing all the accounts of people with Nigerian connections, like doing transactions in Nigeria, doing the transactions out of Nigeria, right? It was because of this. It's basically because when we entered that list, they had to be doing extra compliance checks for every transaction, and it was becoming too much, right? And so they just had to cut it off. Now that was like a clear impact of this FATF list on being able to do business globally, depending on what country you are from, right? So what has happened is that the Nigerian government is, so we have like 9 things that we're supposed to tick off, right? And based on the last report in June, we had ticked off 30% of that. So let's say out of 9, we had ticked off 3, and then the deadline is for us to achieve these things by May 2025, so that by the next list that will be released in October, so a list is released February and October annually. So by the next list in October 2025, you should be out of that list. But between then and now, if you are offshore trying to do transactions with Nigeria, you will see that you get flagged a lot. You will get flagged a lot. So what I recommend to people is use correspondent banks, right? So that you avoid facing Nigeria directly, because your compliance issues will be a lot, or else you must provide documentation ahead of time. So this is why those things are happening. It's not for any political it's not for any, oh, they don't just like Nigeria. Do you understand? All those things. It's because there's a list, there's a standard, there's a standard we're supposed to meet up with that we have fallen short of. We were on the list before, we were taking off that list, and it did help us. That was when we set up EFCC, anti-money laundering, all those things. When we set up all those things, those were the things we had to do to get off the list that time. And then somehow or the other, we fell back, right? And so the process of getting us back there and staying out of the list is the work that we need to, and we do hope, especially as Nigerians, that this gets sorted out quickly, because it is a major issue and it has impact on real small businesses trying to do business globally. On this note, just want to say thank you. Sorry for the technical glitch. I'm not even sure if you could hear me or not, but we'll try and edit this recording to take out the time that was wasted. And of course, please join our free newsletter community. Oh yes, I forgot the last news out of Nigeria really is that the federal government has offered 9 months amnesty for illegal dollar. This one is a little debatable, because they do have to come and define what illegal dollar holdings is clearly, and there should be some kind of law to support, or some kind of framework, legal framework to support that definition. Because as it is, holding cash currently in dollars is not illegal, at least from what I know. So that definition needs to be clear. But what are they trying to achieve? They are trying to get more cash out of the externals into the system, right? And then talking about this, there was also news that supply has increased. So it's tough. Once you don't have the money is out of the system, the central bank cannot control it, and that's where the issue really lies, right? And so that's what they are trying to do, bring as much money into the system. But can you call me holding cash illegal? I'm not sure. I don't know what the legal backing is for that, and we'll have to see how they're able to implement it, because it seems like a tough one, because, or maybe there's going to be some constitutional changes on the back of this. I don't know, because I'm not even sure that Nigeria can legislate USD in Nigeria. It's not their currency. It's not Nigerian's currency. So we have to wait and see how this will pan out, because it's highly debatable if this is even a path to tread. But understand what they are trying to achieve. They are trying to take cash out of the streets and into the financial system. It's only when you have cash in the financial system that the central bank can regulate effectively. And so that's why a lot of the tools that the central bank is using is not really working, because there's too much cash in the system, too much cash out of the system on the street. So even if you are doing anything, it's impacting less and less of the economy. So thank you very much. See you next week. Please share with your friends if you found this useful. Like I said, we'll edit the video. Sorry for the technical glitches. I wasn't even sure if you could hear me or not for a split second or two. But see you next week. Have